Should inflation change your home buying plans? Inflation still remains a major concern amongst all of us and plays a big part in our everyday lives and the decisions that we make. But how will it affect you if you're considering buying a home in 2023? Now, we saw inflation grow to a level we have not seen since the 80s. And so generally speaking, today, our hard-earned dollars aren't stretching as they have over the last couple of years. And regarding housing, although inflation has since slowed in the last few months, Freddie Mac states that the median sales price for all houses sold in the United States has increased by nearly $110,000 in the past 2 years, reaching $467,700 by the end of 2022. This has caused the Federal Reserve to step in and try to control inflation by raising the Fed funds interest rate. Now, when the Federal Reserve raises the Fed funds interest rate, it impacts interest rates across the country, specifically home equity lines of credit, credit card interest rates, and car loan interest rates. It doesn't necessarily drive home loan rates. However, other things going on in the economy have brought home loan rates up dramatically from what we saw just 2 years ago. But what does this really mean? Does that mean we just don't buy houses? Let's walk through it. In response to what's been going on in the economy and mortgage rates, they have increased at the fastest rate since the early 80s. According to Freddie Mac's primary mortgage market survey, rates increased from slightly more than just 3% in early 2022 to more than 7% in November 2022. In recent months, mortgage rates have come down a little bit, but still remain double what they were just 2 years ago. So what does this tell us? Should you hold off on buying a home? Good question, right? Here's the deal. Right now, because interest rates are higher, it is impacting affordability. Let's just be honest. An interest rate, let's say it's 7% or 6.5%, is way different than an interest rate at 3.5% or 4.5%. But the logic behind this is, are rates ever going to get that low again? It's highly unlikely they will. Rates always go up and down based on various factors. And interest rates are expected to settle back down, probably in the 5s or so. But here's the deal. Once that happens, all of that pent-up demand, because there are still more people that want to buy homes than homes that are available in this country. So right now, even though inflation is up, even though interest rates are up, it's a unique opportunity to be able to win and purchase a home if you can afford it, because there are limited buyers out there and there's limited inventory. So if you can buy today, then you're going to be ahead of the game and be able to start building equity in your home, and your home will start to appreciate. If we fast forward even, let's say, 6 months or a year from now, and let's say interest rates do start to come down, because again, mortgage rates are going to follow inflation rates. So as inflation comes down in our country, mortgage rates will come down in our country. And so that's like the easiest way to gauge it. So as those rates come down, guess what? All that pent-up demand is going to be back, which means more competition, which means higher prices out there for the homes that you're wanting to buy. So right now, it's kind of like this little secret time. There's a lull because of inflation, because of higher interest rates, because of lack of inventory of housing available, and because some buyers are on the fence. Now, if you decide that you can afford to buy at today's interest rates, you're securing that payment. So now every month when you're paying something towards your monthly housing cost, part of that payment is yours. That is called the principal of the loan, and that is your equity now that you're building. And at some point in the future, if interest rates come down, which it's highly likely they will, if they come down, you can always be positioned to refinance if you can qualify at that point in time. And so think about it. If you're now acquiring a home where there's less competition, even though it's at a higher interest rate, and then interest rates drop, let's say in a year, and it makes sense for you to refinance, now you're no longer competing with all those other buyers that are trying to go out and buy a home because you already have your home. Let's say that you've decided, okay, Kelly, I am ready. I'm going to take advantage of this market. Even though rates are higher, I can afford the payment. I want to get in now while there's less competition. How do you know what the best loan product is for you? Well, the best thing to do would be to talk with an experienced lender. Schedule a call with the link below to one of our mortgage advisors, and we'll get you on your path. Don't let inflation get in the way of your dreams of home ownership. And don't forget to subscribe to this channel for more mortgage education. soon.